Good evening, everybody. Am I audible, Pooja?
Yes, sir. Yeah, you're audible.
Okay, fine. I welcome you all to this webinar on the new TDS provisions that have been introduced and are going to be applicable effective from 1st of July. It has far-reaching effect on many companies, particularly pharma companies who are giving a lot of freebies and from the way the grapevine and the circulars and other official communications are being received, it appears that pharma company is going to take a lot of hit on this. Not only pharma companies, many other FMCG companies would also be hit due to provisions of this act, wherein the administrative work is going to be increased to a great extent. Apart from administrative work that is going to increase, there are definitely a lot of litigative points that is going to come. And how does government take this up is a big question mark. It is there for all the tax practitioners and the industry professionals and the associations will have to work hard to get clarifications on many issues, including how to allocate it between the beneficiaries, how to identify beneficiary, not only identifying but also allocating the amount of expenditure that is incurred by the companies. Be that as it may be, only time will tell. Maybe number of circulars would come, number of clarifications are required, maybe number of litigations would come, and before the law is settled. Today we have met to discuss the threadbare law, how best it can be implemented in practical way, and what are the intricacies and precautions which are required to be taken by us. So we would rather be discussing the law, discussing the various circulars which have been issued by CBDT, and then decide how do we go ahead. It is a kickoff round that is happening today. Till the time number of gray areas which are there for which the clarifications are received, we will have to live with it and try implementing these law. CA Pooja Sampat, who is going to handle this, she has been in this field for quite a few years, and based on her experience, I am sure she will be able to guide us properly, give us the insight of what exactly the law is all about, what are the practical nuances, and how to handle them. I'll hand over to Pooja for further discussion. Of course, Pooja is going to take both the sections 194R and 194S. 194S is for mainly for cryptocurrencies and other digital assets, for which not many companies per se would be interested in doing, but then she will have an overview of that also, because most of the most of the compliances are with the and the crypto dealer. So I'll hand over for further discussion. Thank you, Pooja. You can take over.
Yeah. I'll request the participants to mute and only unmute when any question is to be asked or something. Just a sec.
Maybe request the participant to put themselves on mute.
So thank you so much, Amit sir, for such a wonderful introduction on the sections and the session that is going to be conducted. I hope I'm audible. Everybody can hear me?
Yes, Pooja, go on.
Yeah. So first of all, I would like to welcome all the participants who've joined the session. A very good evening to all the ladies and gentlemen that have joined the session today on 194R and 194S TDS sections, which are going live from 1st July 2022. That is day after tomorrow as we speak. So rightly said by Amit sir, whenever a law is made or a section is introduced, there are a lot of compliances attached to it. There are a lot of queries, doubts, clarifications, anomalies around it that needs to be addressed, that needs to be seen when we are practically and actually dealing with it in our business or profession, that in our day-to-day lives. So like that, circulars have been released by the departments giving clarifications on some of the things relating to R and S, which we would be discussing today. So I would like to just share my screen. Just a minute. Yeah. So before jumping to these sections, I would like to inform the approach that we'll be following. I'll be taking up 194R. We'll be discussing that in brief, and any questions or any queries that participants may have, they can write it in the chat box or they can note it down, and we can take up the Q&A session after completing 194R, post which we will go to the overview of section 194S. So starting with 194S, I mean, before starting with the actual section 194, we need to understand why of the sections. I mean, whenever a law is made or provisions are formed, there is always a purpose or intent that the government has in implying or in making those laws. So what is the purpose or intent for which these sections have come into force? So talking of section 194R, what is the purpose behind government introducing TDS under section 194R? So it takes us back to section 28 of Income Tax Act that deals with income, that is income from business, profits and gains of business and profession, which states that any recipient who receives benefit or perquisite in course of his business or profession is to consider that benefit or perquisite as a taxable income and pay tax on it accordingly. However, such recipients, it has been observed by the department that such recipients do not report such benefit or perquisites, which eventually leads to furnishing of incorrect particulars of income or understating of income and not discharging the tax liability on the same. So to curb that, to have an eye on such transactions, they have brought section 194R into picture. Now, how it is going to affect, how it is going to help government keep an eye on such transactions and appropriate discharge of the taxability on it, we'll see in the applicability section. So a quick synopsis or quick run through is listed. So first we will be just a sec. Yeah, so first we would be seeing the applicability, that is section to whom it is applicable, the assessees to whom it is applicable, the limits, the criteria for the same. Then we will be moving on to the exemption that is provided to individual and HUF that they do not comply with the this sections. That is, this section is not as well applicable to them. Further, we'll be seeing the valuation part, that is the taxable amount on which the TDS is to be deducted. That is the amount, how the amount is to be determined or what exclusions or inclusions have to be made. Then moving further, we'll be seeing the examples, which will help us to understand this section better. I've listed a few examples that have been mentioned in the circular as well, and which we come across or which you might come across in your daily life in the business and profession that you conduct. And last but not the least, we'll be seeing some FAQs, which are a little controversial in nature or which requires a deep analysis. Right. So starting with the applicability part in of section 194R, Just a minute. So yeah. So this section says that any person who benefit or perquisite to arising from carrying on business or profession by such resident recipient, then section 194R is to be deducted at the rate of 10% by such benefit provider with effect from 1st July 2022. So the main areas which this applicability will be largely affecting to the provisions, whether it will be applicable or not, is regarding the resident recipients. So what it says that provider can be any person, but the recipient of such benefit or perquisite should be a resident recipient, and such benefit or perquisite so received by such recipient should be arising from that recipient carrying on such business or profession, or from virtue of him carrying on that business or profession. So this participants, it's very important over here, because if those benefits or perquisites that any person has provided to such recipient is not on by virtue of him carrying out that business or profession, then TDS under this section would not be applicable. So the threshold which has been prescribed for this section is rupees 20,000 in a year per recipient. So if the amount exceeds 20,000 in a year to one recipient, then TDS under this section with effect from 1st July 2022 is to be deducted. We'll discuss the thresholds, the valuations, exclusions part in the next slide. So yeah, moving on further, what is the exemption that is given to the individual and HUF? So this TDS section says that if individual and HUF whose sales, gross receipts or turnover in previous financial year, that is in our case, financial year 21-22, as the section is going live on 1st July 2022. So in our case, it would be financial year 21-22. If the sales, gross receipts or turnover in previous financial year does not exceed rupees 1 crore if he is carrying on business, or does not exceed rupees 50 lakhs if he is carrying on profession, then TDS under section 194R is not applicable to such individual and HUF. He need not comply with this provisions. So in simple terms, if I would like to put it, I like to put it this way, that every partnership company, LLP, companies will have to comply with TDS under this section, that is 194R, and only those individuals, and even the individuals in HUF, but only those individuals in HUF who fall under these criteria will not be expected, who are outside the purview of this section under 194R. So when we are comparing this TDS section with another all other TDS sections that are in place, say if we take 194Q in place, so the exemption that has been provided in 194Q is for any assessee whose turnover in the previous year does not exceed 10 crore. No differentiation has been made in terms of type of entity or type of assessee. But in this section, a specific exemption has been only given to individual and HUF, making all other entities or assessees liable for complying with this section, right? So moving further with the valuation part. So what is the taxable amount? What is the amount of benefit? What will constitute the value for benefit or perquisite on which TDS is to be deducted? So in simple terms, if I put it, what is the taxable amount on which TDS is to be deducted? So suppose if you've purchased the benefit and perquisite before providing it, say I've purchased one watch and I want to provide it to my customer on a Diwali occasion, or I want to provide it to my dealers for achieving certain targets or for achieving some goals. So the value at which I've purchased that watch will constitute the value of such benefit or perquisite. And if the same exceeds 20,000 in a year per recipient, TDS would be applicable on the same. Say if the benefit or perquisite that I am providing is manufactured by me. So the value that I charge to my customers would be constituting the value of such benefit or perquisite, and TDS accordingly, if 20,000 limit is crossed, will be applicable on the same. And in any other case, fair market value. So what can be the examples of fair market value? If I could rightly say that, if suppose I'm holding one laptop and I'm using it already, and I have to, and I'm providing it as a benefit or perquisite, then which I have been using it, so that the value of those assets would be depreciated over the years. But when I'm providing that benefit or perquisite, that the value of such benefit or perquisite would be the fair market value as on today. So what will be the value of benefit or perquisite? There are three cases that they have listed down. If you have purchases, then the value at which you have purchased. If you're manufacturing it and then providing it, then the value that you charge to your customer, and fair market value in any other case. So moving further, the main question or the anomalies that we come across is relating to GST, whether GST on the same is to be considered as value or benefit, whether TDS is to be levied on GST or not. So in this section clearly says that GST is not to be included in the value of benefit or perquisite. That is, GST is to be excluded from the value of benefit or perquisite. That is, if I put it simply, GST is to be excluded from that 20,000 threshold that you're counting. And it is not required to be included. It is specifically said in this section, so there is no confusion regarding it. Further, of course, question will pop up in our mind that this section is coming into effect from 1st July. That is, almost 2-3 months have passed on, and in the mid of the year it has been, not mid, but in between of the year it has it is becoming in force. So what about the benefits or perquisites that were given from the period 1st April 2022 to 30th June 2022? Will they be counted for threshold? Then the answer is yes. The benefits and perquisites that are given from 1st April 2022 to 30th June 2022 would be counted for threshold limit of rupees 20,000 per year per recipient, but taxability would be only attracted on the benefits or perquisites provided after 1st July 2022. Makes sense, right? Because the section was not into picture from in this period, that is 1st April to 30th June, it was not into picture. Then taxability or of TDS or implication of TDS on those amount is any which ways not in question. So if we take an example over here, say from 1st April 2022 to 30th June 2022, we have provided benefits or perquisites worth 25,000 to a dealer for achieving the target or such. And then from 1st July 2022 to 31st March 2023, benefits worth 50,000 or 1 lakh have been provided to him. Then what will be the taxability? So the benefits or perquisites provided right from 1st July 2022 to 31st March 2023 of 50,000 rupees will be taxable entirely, as the threshold limit of 20,000 was already crossed in the period 1st April 2022 to 30th June 22. Taking another example, say if benefits or perquisites worth 18,000, 5,000 have been provided in the period 1st April 2022 to 30th June 2022, and from the period of 1st July 2022 to 31st March 2023, benefits worth 18,000 has been provided. And what would be the value of benefit or perquisite on which TDS would be applicable? Then the answer is the value of benefit or perquisite on which TDS would be applicable is rupees 18,000, as the threshold limit of 20,000 gets crossed as soon as we give that 18,000 to that recipient. Important thing here is the limit is per year per recipient. So yeah, that would be the valuation part. Now, moving further, what are the exclusions from this benefit or perquisites? So the moment we hear the word perquisites, some other perquisites or some relevance of this word strikes into our mind. And where is that relevance in? The relevance of that word is in the head of income salary. So perquisites under the head of salary that are payable by the employer to the employee are taxable under section 17(2), which is already in place. So 194R specifically states that such benefits or perquisites are already taxed under section 17(2). So that perquisites will not be liable for TDS under section 194R, as there is a separate section dedicated to it. So what would be, taking some examples of it, like benefits that is given by the company to its directors, employees, like ESOPs, mobile phones, cars, rent-free accommodations, tours or trips, and performance-linked incentive. This would be taken care in the head of salary, that is perquisites under section 17(2), as they are given by virtue of the relation between an employer and an employee. So TDS under section 194R, section 194R specifically deals with only those benefits and perquisites that a recipient resident receives by virtue of him carrying on such business or profession. One more exclusion that has been done and from the benefit or perquisite is to a government recipient. So a government recipient who's not carrying on business and profession, like for example, if we take government hospital, no TDS would be applicable to the provider who's providing that benefit or perquisite. This also makes sense. Let me take you to the applicability slide, which states that the resident recipient receiving such benefit or perquisite should receive it by virtue of him carrying on such business or profession by such recipient. So if he's not carrying on business and profession, then the benefits or perquisites that he's receiving are not by virtue of him carrying on business and profession. Hence, the exclusion has been made. So moving further, examples, what will constitute benefit or perquisite? Because when we see these examples, we can relate more into our practical life. You will come across this starting from 1st July 2022. So this might help you out. So number one, trade discounts, cash discounts, rebates on MRP, listed price of products or services, whether TDS under section 194R is applicable. The answer is no. They're in the normal course of business. They are not a benefit or perquisite that we are providing. Similarly, additional quantities provided free of cost with basic price, that is 1+1, buy one get one free schemes, whether that will amount to a benefit or perquisite? No. That is again in a normal course of business. It will not amount to a benefit or perquisite. Then what about free samples? Yes. The answer for the applicability under this section for free samples is yes. Because free samples, when we are distributing free samples, it may be a sales promotion activity for us, or it may be a business promotion activity for us. And the person, the recipient, resident recipient who's receiving such samples is receiving by virtue of him carrying on that business or profession, and it will amount to a benefit or perquisite provided. And if the value exceeds 20,000 per year per recipient, yes, TDS would be liable on those free samples that have been given. Moving ahead, what about the incentives in cash or kind that we give to dealers, distributors, channel partners? So one thing, this section has made it clear that whatever benefit or perquisite we provide, be it in cash, be it in kind, partly in cash, partly in kind, wholly in cash or wholly in kind, it will be liable for TDS if the criteria are met. So incentives in cash or kind given to dealers, distributor, channel partner, yes. Again, all the criteria are ticking. The recipient resident is carrying on a business or profession, and by virtue of him carrying on that business and profession, he's receiving such incentives. Hence, it will be liable. Loyalty rewards, that is cashback, vouchers, discounts, again, the same logic applies, the same criteria, it will be applicable. What about the gifts based on quantities, values? Like we come across schemes, like if you purchase it today, you get so much of discount if you purchase that. So if your company, if your business is offering that, then what about it? Whether it will be deducted, it will be liable for TDS? The answer is yes, it will be, because again, all the criteria, the resident recipient is carrying on business and profession, and by virtue of him carrying on that business profession, is receiving those benefits and perquisites. Then the most common thing that we come across and gifts such as bags, kits, gold coins, silver coins, watches, mobile phones for say target completion or sales promotion activity or business promotion activity, then yes, it would be liable for TDS if the recipient is carrying on receiving it by virtue of him carrying on that business or profession. What about the incentives such as free or company sponsored entertainment tools for target completion? Again, the answer is yes. Insurance coverage for the dealer and his employees and families, yes, it's a benefit or perquisite provided for the dealer. He is carrying on that business and profession, and by virtue of him carrying on that business profession, he has received this benefit. So yes, it will be liable to TDS under section 194R. So now the most controversial, or if I may use that word, or anomaly area is the reimbursement of out-of-pocket expenses, that is traveling, conveyance, boarding, lodging, any sort of expenses to the auditors or consultants by the recipient of services, that is the company, where the invoice of such out-of-pocket expenses is not in the name of the company. So what's the clarification that has been received, the circular that has been received from department, what it's trying to say is that, suppose, let's understand this by way of an example. There's a firm A, say ABC. There's a firm ABC who's auditing the firm PQR, and who for his auditing purposes has visited the city, has incurred lodging and boarding expenses, has incurred traveling expenses and conveyance expenses. And if the bills and the invoices of those expenses are in the name of ABC and Company, who are the auditors, and they are paying it to they are paying the invoices and simply getting reimbursed by the company, that is PQR, the auditee company, then it will be liable for TDS under section 194R. So simply, if I may put it this way, if the lodging, boarding, traveling, conveyance, whatever expenses your consultants or auditors are incurring, the invoices for that expenses should be in your name, that is, should be in the company's name who's getting audited or who's appointed the consultant. Let it, the auditors or consultants pay them the amount, and you just simply reimburse it to them, then it would not be liable for TDS under section 194R, because it will not amount to benefit or perquisites, right? So moving ahead, what about the customary gifts to business or professional associates on festive occasion or successful completion of projects, etc.? There must be, I mean, there can be n number of criteria here when we provide benefit of perquisites. Then the answer to that is yes, because all the criteria of getting 194 applicable are ticking over here. Next comes, what if the social media influencer, brand ambassador, artist retains with it the benefit or perquisite or product, whatever the business in you've provided to them, like car, mobile, outfits, cosmetics, etc., whatever it may be, for which he's exercising his social media influence, and the set benefits or perks are not returned to the company. So the main focus over here is, if such benefits or perquisites, or if the product that you've given them to advertise, to review, say YouTubers and everything, and they do not return it to you, they retain that product with themselves, then yes, that will amount to a benefit or perquisite that you have provided to them, because they are resident recipient, they have received this benefit or perquisite by virtue of them carrying on that business and profession. All criteria are getting ticked. So yes, TDS would under section 194R would be applicable in this case. What if they return it back to you? They have done all their reviews, everything is completed, their marketing, advertising, everything is done, and they return that product back to you. Then whether 194R would be applicable? The answer is no. Then it will not be applicable. Then it will be exempt. So moving further, incentives in cash or kind given to any director employee, associate, consultant of the company by any third party by virtue of employment of such director employee with the company, or by virtue of professional association of such associate or consultant with the company, whether TDS would be applicable. Of course, if you're giving some benefit or perquisite to say X person who's employed with that company or a director of that company, the benefit or perquisite will be enjoyed by them and not by the company. So whether in that case, whether TDS would be applicable, then yes, the TDS would be applicable. The third party, that is you, who would be providing such incentives or benefits to any director, employee, associate, or consultant of the recipient company will have to deduct TDS at the rate of 10% under section 194R in the name of the company on deeming fictional basis. What does that mean? So this means that suppose I am gifting gold coins, watch, or motor car to the director of that company, to the director of the who's my customer. The company is my customer. I'm selling medicines or something to them, and I give them vouchers or any kind of benefit or perquisite to that director. So whether TDS under section 194R could be applicable, the answer is yes, it would be applicable because they've received by virtue of them carrying on business and profession. And TDS would be deducted in the name of the company to which such benefit or perquisite is provided. That is the company in which that director, employee, associate, or consultant is associated with, employed in, right? And then what they can do is they can deem that or they can recover that benefit or perquisite under the head salary from that director, employee, associate, or consultant, as the case. We will discuss this in another slide too. So these were the examples of benefit and perquisite. Of course, it's not an exhaustive list. I mean, there can be n number of other benefits and perquisites when you guys will, and when we will actually come in face to face to them from 1st July 2022, when such incidents will be in front of our eyes. Of course, that will require a lot of analysis and application of mind to be done whether TDS would be applicable on the same or not, because it's this section is very huge. I mean, the word benefit or perquisite can include anything, but the criteria for that getting applicable are: one, any person is providing that, it exceeds 20,000 per year per recipient, the resident recipient who's receiving is receiving by virtue of him carrying on that business or profession and by not any other virtue, right? So the FAQs. So this FAQs are to be discussed, which first one is whether taxability of benefit or perquisite in the hands of the recipient is to be seen. No. Of course, that benefit or perquisite will be taxable in their hands under section 28, as I mentioned earlier, because they're receiving that by virtue of them carrying on business or profession. But whether we have to see that whether it is taxable in their hands, the answer is no. Immediately you check the criteria, all are applicable, then you just deduct TDS. In taxability in their hands is not to be seen. So whether TDS is liable on capital asset provided like motor car, land, etc. Yes, because in kind is also covered. The section also covers benefits of perquisite provided in kind. So of course it will be covered. This that we were discussing earlier. When the benefits perquisites used by employee, director, their relatives who may not be engaged in that business and profession in their individual capacity, what is to be done? So the tax is to be deducted in the name of recipient entity, as mentioned earlier, as usage by employee, owner, director is by virtue of their relation with that recipient. The recipient may then treat, as I mentioned earlier, benefit or perquisite in hands of employee, director, owner under the head salary. The examples of this would be medicines that you'll be providing to the doctor who's an employee of the hospital or consultant of the hospital. You're providing it to their employee or a consultant, not providing it to the hospital, but they are receiving it by virtue of that recipient entity, that is hospital carrying on that business profession. And that hospital can then treat the such benefit or perquisite under the head salary from that employee or consultant. So this were the FAQs. So the part that we discussed, that to keep an eye on these transactions and to have a list of transactions, how government would be benefiting from this. So now when a benefit or when the benefit provider will have to, we all know a TDS is to be paid. Whenever TDS is to be paid, Form 26Q is to be, it is to be reported in Form 26Q. So now the government will be having a list of all the transactions which are covered under 194 hours. That means he would be having a list of the benefits or perquisites provided, along with the name of the recipients, the person who has provided it, the section, the dates, and everything. That list can be used by the government to cross-check with the returns of the recipient, that whether he has reported that income into his taxable income and whether the tax on the same has been properly discharged. So this is the benefit that the government will be getting. Continuing the FAQ, what if the benefit is in only or the benefit is cash and in kind? Because the benefit has been given in kind, then what is to be done? So the TDS is to be paid by the recipient as advance tax. I repeat, the TDS is to be paid by the recipient as advance tax, and the same to be reported in Form 26Q along with the challan number. Declaration along with advance tax challan copy to be provided to the benefit provider. The Form 26Q that has been already updated with all those provisions. If you see Form 26Q now, there are 194R and 194S sections separately given in there. And for moving further, the provider can, before providing this benefit or perquisite, pay the tax to the government along with reporting in Form 26Q. The tax so paid by the benefit provider or the perquisite provider will be considered as benefit or perquisites. So when is a event of deducting TDS is attracted? When we are booking the expenses or when we are making the payment, whichever is earlier. But in this case, when the benefit or perquisite is provided only in kind, or if it is provided in cash and kind both, but the cash component is not enough to cover the TDS liability, then the TDS is to be paid by, if the recipient is paying it, it has to be paid before providing that benefit, because as advance tax, and the same is to be reported in 26Q. Or the provider is paying, he has to pay it, deposit with the government, report in Form 26Q along with the challan number before he's providing such benefit or perquisite to the recipient resident. Right? So yeah, that was section 194R. If any questions or anything, we can take it up. No question.
I'm Pranav Damania.
Hi, Pranav. Yeah.
Hi. So basically, what you're trying to say that if the free samples are given, which is of course in kind,
yeah,
whether the TDS needs to be deducted by the company who is providing, or it will go by the advance tax rule that he has to pay advance tax. Because
so if the recipient who is receiving the person to whom you are providing that free samples, if he's deducting that, he's paying that tax, and he has to pay it in form of advance tax, normal advance tax that we pay, and he has to report it in Form 26Q. And if you are going to pay that, then you have to pay that before providing that free sample to that person, and you have to report it. You have to deposit it with the government. Normal TDS, it will be normal TDS for you, and you have to report it to the government in Form 26Q. So
okay. So both the options are there. Whether okay. But it's safer because for a company it becomes very difficult to trace the person whether he's paying advance tax or not.
Correct.
Yeah. And my other question is that sometimes this influencer business, what does, like, the FMCG company does give the free sample to an agent or an agency which in turn give to this influencer. So
Okay.
influencer does not keep, the agency does not keep any margin or anything. They just pass it on those samples to influencer. So in that case, how the TDS thing will work here?
I mean, in that case, of course, whether the agent would be considered as a recipient or the social media influencer would be considered as recipient will have to be seen from that perspective. Because the agent, if we see from a layman perspective or general perspective, the agent over here becomes the recipient of that benefit or a free sample rather than the social media influencer. So yeah, it would be applicable, I think, in that case.
So I think on both the legs of transaction it will be there, like the FFPG company will deduct TDS on the agent, and the agent will again deduct TDS on the
But practically, Pooja, I'm sorry to interrupt, but practically it may be possible to transfer the entire thing on the social media influencer by getting some kind of confirmation from the agent that it is ultimately it will be passed on to the social media influencer and he is the beneficiary.
Right.
If that happens practically, probably we would be able to pass on the income that is going to be charged in the hands of social media influencer, because he's only an agent. The intermediary is only an agent. So if we can transfer it, nothing like it. And in my view, it would be possible to do that. Ultimately, if you go by the spirit of the law, spirit of why this amendment has come or additional TDS is required, is that they want to catch hold of the recipient.
Yeah.
And once that is taxed in the hands of somebody, I don't think there should be any difficulty in contesting that why it is not deducted, or I mean double deduction or double tax deduction would not serve the purpose, and that is not the intention of law.
Right.
Got it.
Sorry.
Anubhai, nice to hear from you. Hemant Mehta here. Anubhai.
Yes, Hemant bhai.
Yeah. Anubhai is also resolution professional. Like me.
Yeah. Hi.
You can go on.
Yeah.
Now, can I ask you one question?
Yeah.
You see, suppose the company is giving free sample or say Diwali gift. Now, in which PAN number the TDS will be deposited? 10%.
The recipients.
The recipient may be 10 recipients. Now, say XYZ, Mr. Hemant Mehta got one, Mr. Amit got one, Mr. Damania got one. So I have to make, and if I am giving the 3 gifts to 3 persons, do I have to deposit in everybody's PAN number?
Yeah, if everybody's, if the gift that you're giving to everybody exceeds that 20,000 rupees, yes, then 3 of them.
Oh. In that 20,000 in 1 year or
20,000 in the whole year per recipient.
Per recipient. So I have to keep the record that how many gifts I have given to Mr. Mehta.
Correct.
And how much CA bills I have passed for Mr. Mehta.
Right.
This is something.
This, of course, is going to be
a
mammoth task for the industry to find
this
out.
This is ridiculous thing. How the hell one can remember and one can put the thing? I mean, you have to have a big computer to have all these things. I think the people have gone crazy, and nobody has made any hue and cry against this provision. I'm surprised.
So far, nothing. But then once people go through this ordeal, then probably they would wake up and then start making noise.
But you suppose I give this gift to Mr. Amit and I put it in the name of Hemant. Hemant will have to pay the tax 30%, whereas I paid only 10%. 20% he has to pay from his pocket without getting any gift, though because the gift was given to Amit.
But definitely yes, and Hemant should be able to contest this that
that he hasn't got anything. That he never got anything.
Into litigation.
I mean, How
Yes.
can it be possible? And then you are saying that there is no face assessment. You have to make the assessment on digital assessments have got to be made. How can it be possible?
But when it is reported in EIS, you can always take objection to that. There are ways and means of
That means we are taking objections and objections and objections.
and objections, yes, and litigation will go on. Like
Ridiculous. Ridiculous too.
they are very ridiculous.
The ICI should contest it.
Right. Definitely, yes.
I don't know how. Now, Shruti has come to me. She is the ex-chairman of WIR.
Right.
All right.
And there is one seminar going on.
Hi.
Hello, Shri. How are you?
Okay, let me now talk
Hello,
to
sir. Nice to see
let
you.
me now talk to Shruti.
Yeah. Sir, it has to be contested by the party which is being affected, not by the chartered accountant. Chartered accountant are merely the law, they are they are helping in implementation of law. Anyhow, you can go ahead, Pooja.
Yeah. I think there's some network issue at that end. Yeah. So any further questions? Okay.
Hi, Pooja.
Yeah. Hi.
Suppose I am an individual, the SSA is individual, his turnover is say 1.5 CR,
Correct.
but he is covered under section 44AD. So still this section will be applicable?
Yes, it would be because they've only put the limits there and they've not mentioned that tax audit applicability is to be seen or not. They've simply put the limits that if it exceeds 1 crore rupees, then yes, you would be liable for complying with this TDS sections.
All right. Yeah.
Yeah.
Thank you. Yeah.
Oh, yeah.
Yes, yes. This regarding free samples again.
Yes, Vikas.
Little confused that you say because it is a practical way we are regularly distributing free sample to our customer and all the things. The recipient will never pay anything. Okay, entirely at my cost only TDS because he's not for any purpose. It is a free for him.
Correct. So that's why the provision has been given that if TDS is being discharged at your end, you can treat that as well as that too as a benefit or perquisite and take the deduction in your profitability. I mean, they can take it as an expense. So that's the only way out then, which is left here.
Okay, great.
Yeah.
जो देना चाहते हैं उसे 20%, 10% कम देने का, so that remaining amount TDS.
Yeah.
Pooja, just wanted to check. So,
Yeah.
see if there is a there's a e-commerce platform. So there are players onto it for a customer, you can say, and those customer are given benefit in terms of maybe a loyalty or in terms of the activity they are doing it. So suppose a product pricing is say 100 rupees and they're doing some activity and then they're getting some benefit of say out of 100 they might need to pay 40 rupees. So 60 is a benefit that is given to them.
Correct.
So will that be covered under 194R?
Prima facie from the examples. Yeah. Yes.
So would it be counted as a discount or would be counted as a under the ambit of 194R?
So prima facie, if we see, it is a benefit or perquisite that we are passing on. It is in terms of incentives or something. But of course, it needs to be seen on case-to-case basis, and it's to be dig deeper before jumping to any conclusion. So prima facie, yes, it would be covered. But if any such case is there, then we need to make appropriate research to it and take a stand on it, because if it's going to be a regular thing.
And then the second thing is, since it would be an individual, then identifying, because and there will be more than thousands of people on the platform.
Correct.
Identifying whether they exceed the turnover, they don't exceed the turnover, would be a Herculean task. 50 lakh a year. And would they
Turnover turnover, yeah, sorry.
Rahul, turnover that you are
Sorry.
referring to has to be with reference to the person providing the benefit or perquisite, not the recipient of the benefit or services. So turnover in that case would be yours. I mean, the person who is giving it. So that would always be available with him. And the liability is also on the service provider.
Okay.
So that may not be difficult.
Mm-hmm.
Of course, what you said, so long as you can show it as trade discount and it is made available to people in general, the applicability of this provision may not be there. It will be considered as trade discount.
Mm-hmm. Okay.
Yeah.
Hello. Hello.
Yeah.
Can I speak?
Yeah, sure.
Some input on the samples.
Yeah.
The discussion is going on as to about how the taxability of sample will take place.
Correct.
Now, so far as the giver is concerned, he has to deduct the tax, there is no issue. But when he receives the other doctor may decide whether he has to offer it for taxation or not. Because my view personally is that samples given to the doctors are not liable to tax. Now, suppose samples are given to doctors, then it will go also for grossing up. Not that simplicity or sample value will be taxed, because the doctors are not going to pay any advance tax.
No, if they don't pay it, then you will have to gross it. I mean, the pharma company or the person who is giving it, they will have to gross it up and pay tax on that. Na?
That is much more difficult.
It is going to be very difficult.
Okay.
Yeah. Yes, Pooja, you can go.
Yeah. So we'll head on to our next section, that is 194S. We are short of time, so we'll just have an overview of the section. And if any questions, queries, or clarifications required in that respect, you can write it to us. Even our newsletters with both these sections would be coming by tomorrow. So you can write it to us and we will be happy to help you. So just a sec. Everybody, my screen is visible. Everybody can see it.
Yes.
Yeah. Okay. So 194S, that is TDS on payment on transfer of virtual digital assets. So it is also applicable from 1st July 2022, as the transactions in this has been increasing and to government to make some taxation regulations, and that this TDS sections has come into force. So we'll be discussing, we'll be just having an overview of the applicability of it, what are the threshold limits, who will be the deductor if it is done through exchange or brokers, what will be the valuation, and what if the transaction is in kind, or what then will go on to the FAQ part. So a quick overview, applicability: the person who is responsible for paying any resident any sum as consideration, whether in cash or kind, for transfer of such virtual digital asset, TDS at the rate of 1% of such sum at the time of credit or time of payment, whichever is earlier, is to be deducted by the person. So the person who's paying, who's responsible for paying to the seller any sum, by whether be it in cash or kind, for transfer of virtual digital asset, will be liable to deduct TDS at 1%, and the taxability event would be normal, which is in every case at the time of credit or time of payment, whichever is earlier. So what are the threshold limits here? So they have divided into two parts: specified persons in an for not having any income under the head PGBP, that is profits and gains of business and profession, and individual and HUF having income under PGBP, profits and gains of business and profession, but their sales, gross receipts, or turnover in the preceding financial year, in our case that is 21-22, does not exceed 1 crore if they carry on business, or does not exceed 50 lakh rupees in case of profession, then they will be termed as specified persons. And the threshold limits for them is if the consideration is less than equal to 50,000. So for these two cases, if the consideration exceeds 50,000 rupees for such transfer of virtual digital asset, then TDS at the rate of 1% will have to be deducted. In any other case, if the consideration is less than equal to 10,000 rupees, simply putting it, if the consideration is not more than 10,000 rupees during the financial year, no tax is to be deducted. So your same benefits have been given to individual and HUF, and not to any other entity. Simply to put, any other will be liable for it, will fall under any other case, and TDS would be applicable. So who will be the deductor? If the transaction is in cash. So these are various scenarios that have been depicted here, quickly going through them. If the buyer and seller both are any person, broker is not involved and the exchange is not involved, then of course buyer would be liable for TDS, as he's the one who's responsible for paying the consideration to the seller for purchasing of that virtual digital asset. Buyer and seller both are any person, no broker is involved, but exchange is involved, then of course exchange will have to pay that. Again, he's responsible for paying to the seller for that transfer of VDA. If the buyer is a broker, seller is any person, broker is involved, definitely exchange is not involved, then again it will be broker. Same logic, that he's responsible for paying. So the person responsible for paying has to deduct the TDS, is what the synopsis of this TDS section is. Moving on to another scenario, buyer and seller both are any person, broker, exchange is involved. So if there is a written agreement between the broker and exchange, if there is no written agreement, between the broker and exchange, then both the exchange and broker will have to deduct TDS under section 194S. If there is a written agreement between broker and exchange, then it is to be required by broker. TDS would be required to be deducted by broker, and exchange could just furnish a quarterly statement in 26 QF. Buyer, another scenario, quickly, buyer and seller. Buyer is any person, seller is exchange, broker is involved, exchange is also involved. No TDS is required to be deducted. If exchange entered into agreement with buyer or broker that in regard to all such transactions, he would be furnishing a quarterly statement in QF, and also the exchange has to furnish income tax return, and all transactions must be included there. So of course, over here, two consideration means consideration in cash, kind, partly cash, partly kind. So what if the deductor, what will be the case when the deductor is in the transaction is happening in kind? Both buyer, seller, both are any person, broker is not involved, exchange is not involved. Here they are not paying each other cash, or they're paying in kind, like another VDA for a VDA or anything in kind. So the both buyer and seller will pay the respective taxes, as one is buying one thing and one is buying the other thing. And exchange of challan copies will have to be made for proof of tax payment. Another scenario, buyer is any person, seller is any person, broker is not involved, but exchange is involved. If there is no agreement between the exchange and buyer or the seller, both buyer and seller will pay at their respective taxes. And if there is an agreement between exchange, buyer and seller, then exchange will pay that TDS. What if the buyer is any person, seller is broker, broker is involved in the transaction, exchange is also involved. If there is no agreement between broker and buyer, both broker and buyer will pay their respective taxes. And if there is an agreement, exchange will pay. Moving on to another, buyer is any person, seller is any person, broker involved, exchange involved, yes, both of them are involved. Both buyer and seller will pay their respective taxes. If no written agreement between buyer and seller with exchange and broker will pay the taxes. If there is a written agreement between broker and exchange, of course, the person responsible will pay and broker will pay. There are a number of permutation combinations here. It will have to be seen on case-to-case basis. Of course, this is just a synopsis. Buyer is any person, seller is exchange. Both broker and exchange are involved in the same, then taxability. No TDS is to be required, same as which we saw in cash transactions. If exchange entered into agreement with buyer that in regard to all such transactions, same 26 QF is furnished, and he reports all such transactions as return of income. So what would be the valuation part? Even just like 194R, GST is to be included for excluded, sorry. For TDS reduction, GST value is not to be considered. Consideration from 1st April 2022 to 30th June 2022 would be counted for threshold of that 50,000 or 10,000 per year. but deduction will be only there on consideration credited or paid on or after 1st July 2022. Same logic applies as we saw in 194R. So same again, the issue that we were discussing, the consideration is in kind, cash is wholly in kind, or cash in kind and the cash component is not enough for TDS liability. Then again, here the onus has been given on the seller, the person responsible for paying the consideration to take the challan copy from the seller on record. The seller has to report such transactions in form 26Q. 26Q has been updated to include that. And if there's a specified person, so specified person would be the individual in HUF not carrying on business of that is not having income under PGBP, or if having an income, the limits that we saw. So if that is the case, 26QE has to be furnished. And when exchange is liable for TDS deduction, TDS will be deducted at both the pair being traded, and the balance will be transferred to the customer. Trail of transaction to be maintained by exchange. This is a technicality of it. And the exchange to convert that 1% of that part into cash by executing market orders or converting same into primary VDAs. Primary VDAs are the VDAs that are easily to be converted into INR market, which have a INR market. And exchange will accumulate all the TDS in form of primary VDA or conversion from non-primary VDA to primary VDA for the day, 00 hours to 23:59, and convert the TDS, that kind into market rate at that time. So that would be the case, quite technical over here. FAQs, provision of 194Q applicable. The circular that has been released does not give so much of merit, without giving merit to section 194, because they've simply stated that once TDS is deducted under 194S, TDS will not be deducted under section 194Q. What if the payment is made through payment gateway, say XYZ pays to ABC via digital platform of PQR? The TDS might be liable to both, because the TDS here is applicable to persons who are responsible for paying that consideration. It is clarified that payment gateway will, in the circular released by the department, that the payment gateway will not be liable to deduct TDS if the TDS has been deducted by the XYZ, that is the original payer. Undertaking is to be obtained by PQR in this respect. So yeah, that's all for today. Yes. So that we come to an end of the session of section 194R and 194S. Yes, Santosh will surely will share the PPT. Thank you, Santosh. Thank you very much.
Thank you, Pooja, and thanks everybody for attending and making this lively session by interacting. Of course, if there are any questions, we can take up even later on if we get it on through mail or phone calls or whatever. Thanks. Thank you, everybody.
Thank you.
Sorry,
any questions? Yeah, sorry.
Yeah, I have one question about that grossing up.
Yeah.
So how the grossing up will work? Like, I've given a watch of 25,000.
Yeah.
So TDS is 2,500, but now I have to gross up and then deduct TDS?
Yeah, if you are bearing that 2,500 rupees, you will have to gross up.
Okay.
If that is paid by the recipient, then there is no issue. If that is paid by way of advance tax by the recipient, and he gives you that advance tax challan, then you need not gross it up. But otherwise, if you are bearing this, then that will have to be grossed up.
Okay. Thank you.
Yeah.
Thank you. Thank you so much, everybody.
Okay. Thanks, everybody.